SpaceX went public June 12, 2026, with an IPO share price of $135 a share. That instantly made it one of the largest companies in the world, with a market cap of $1.75 trillion. But does that mean SpaceX is actually worth $1.75 trillion? The answer to that is far more complicated than most investors realize, because there's multiple ways of valuing a company, and we'll get into that in this video. We'll also take a look at what market cap is, what it is not, and how the market is structured, all the way from the small micro caps to the large mega cap companies. And along the way, you'll learn some interesting facts about the overall structure of the stock market. So before we get into those other items, let's first take a look at what we mean by market cap. For this example, I'm going to use NVIDIA and Microsoft. NVIDIA is currently the largest company in the world. These figures are as of the close on June 11th, 2026. The share price of NVIDIA was $204.87. Microsoft was $390.34. So the price per share of Microsoft was almost double that of NVIDIA. But share price tells you nothing about the size of the company. We have to look at that in association with the shares outstanding, which basically is just the total number of shares available to trade. NVIDIA has 24.22 billion shares outstanding. We would multiply the number of shares times the price per share, and we get to what we call the market cap, okay, of almost $5 trillion. Microsoft, we take the price per share times the number of shares outstanding, and we get $2.9 trillion. So even though the price per share of Microsoft is almost double that of NVIDIA, the market cap of NVIDIA is roughly 70% larger that of Microsoft. Okay. Now you got to remember the market cap is always changing because the price per share changes as trading happens throughout the day. And also the shares outstanding change once in a while. A company can do a stock split, okay, increasing the number of shares. They can do a reverse split sometimes. They can do stock buybacks. They can issue shares to employees that might exercise those options. And there's multiple other factors that can change the number of shares outstanding. So the market cap is a moving target. Okay. Now, we also classify companies by size based on market cap. We have micro cap, small cap, mid cap, large cap, and currently in today's world, mega cap companies. But these change from time to time too. Okay, back in 2000, a micro cap was under $300 million market cap. That's the same today. Small caps were 300 million to 1 billion. Mid cap was 1 billion to 5 billion. Large cap was 5 billion and above, and that was usually just it. On rare occasions, you might find somebody that, classified something as a mega cap. It was rare, but if they did, it was something above 100 billion. Now, in today's world, small caps go from 300 million up to 2 billion, okay, double that of the 2000s. Mid cap goes from 2 billion to 10 billion, large cap 10 billion to 100 billion, and the mega cap is anything above 200 billion. Currently, there's roughly between 50 and 60 companies that are considered mega cap companies in our stock market. Okay, now, there's a lot of micro cap companies and small cap companies, but they don't make up much of the overall value of the stock market. In fact, micro cap companies is really less than 1% of the overall valuation of the stock market. Small cap only make up about 1 to 3% total valuation. Mid cap, 5 to 8% total valuation. Large cap, 20 to 30%. These are approximations. And mega cap make up 60 to 70% of the total valuation of the market. Remember, I just said there's only 50 to 60 companies that are mega cap companies. And there's thousands of publicly traded companies. Okay? But just those 50 to 60 companies make up 60 to 70% of the total value of the stock market. In fact, just the 5 largest companies make up approximately 30% of the total market value. We're very top heavy, actually. Okay, now, the different ways to value a company. We already talked about market capitalization. Often, this is thought of really as the public's opinion of the company's worth, not necessarily its real value, because it's the public that buys and sells shares, okay? And a lot of things can influence that, including emotion. Okay, then we have what's called the enterprise value. That's the market value of an operating business after adjusting for debt and cash. So it's really just a formula. You start with the market cap, you add in the debt, and you subtract cash. So the reason we add in debt, for example, is you're valuing the company initially at the market cap. And let's say you were going to buy all those shares. Then you would also have to acquire the debt. So you have to add on that expense. And then you get to subtract off the cash because that would help you, pay off the debt. Okay, so it's really just a formula. Then we have the book value. The book value is backward looking. And it's really just the total assets minus the total liabilities that are on the balance sheet. It's really what an accountant would look at. Sometimes it's just called the accountant's value. Okay, so it's really just the value on paper. Okay, then there's what's called intrinsic value. Okay, this is what people like to talk about a lot. It's forward looking, and it's an estimate of the business actual worth based on future cash flows, earnings power, okay, assets, growth prospects, and so on. Okay, so many people think of this as with the actual worth of a company, but notice it's based on a lot of estimates. And depending on who's doing those estimates, that can vary greatly. Okay. So, but when we look at, how companies are classified, small cap, mid cap, it can help us diversify our portfolio because maybe we don't want all of our, investments in just mega cap companies. Okay, most indexes are very top heavy. So we might want a small cap fund, okay, in our portfolio. And now you kind of know the size of those companies. Okay, so now we'll take a look at just a couple other things. First of all, these definitions, okay, large cap, mid cap, or categories, I should say, are not legal or regulatory definitions. There is no strict definition of these. Okay, the ranges that we went over are the typical definitions that are usually used. However, different organizations, like different brokerages, financial media, mutual funds, ETF, index funds, or academic research can all use different ranges for, let's say, a small cap and mid cap and large cap. Okay, there's no strict definition of these. Sometimes an academic study may classify those differently. Certain indexes have their own definition for what they view as a small cap or a mid cap, okay? But in general, these are the typical ranges that are used, okay? So anyway, I hope this has been helpful, somewhat informative, hopefully, and I'd appreciate it if you hit the like button, and I'll see you next time. Thanks for watching.